Welcome back to today's morning report on Monday the 29th of June with me, Richard Perry, market analyst at Antec Markets. Moving on to dollar yen now, and the safe haven flows that we've seen in dollar yen have dragged the price back lower. Interestingly enough, I've been talking about this pullback towards 122 figure for quite some time, debating over the last couple of weeks as to whether we'd had a low in place. We had a low at 122.10 today. So again, this is sort of still part, I think, of this sort of just near-term pullback towards that support band. I think ultimately will prove to be a buying opportunity. This could be, again, part of that. So looking out for buying signals now. Momentum indicators remain sort of fairly positive, really. RSI got back to sort of 49 in the last few corrections, 49.50, currently around 49. MACD line still corrective back towards neutral. Stochastics are interesting, they've rolled over so on that rebound. So the fact is that we now need to see closing levels above 122 figure, I think. You wouldn't want to see a close below 122 figure because that could usher in further correction to the downside. But look at this on the hourly chart. Look out, the Fibonacci levels are once again playing a huge role on this chart. Just zooming in here. So that's 122 sort of 02, which was that ultimate breakout. 122 spike low down towards 122.10. But since then, you've seen the Fibonacci levels once again coming in. Look at that 38.2%, 123.20. Time and time again, supportive, then resistance, supportive on Friday, and now resistance again, 123.20. So interesting. And we've had 122.35 area, which is the 50% retracement, coming in again as that sort of price fell away today. So 122.31 is that spike, is the sell-off low following on from the rebound. So these two Fibonacci levels are still playing out a significant role in this chart. So we need to continue to focus on them. Continue to look at momentum indicators. Hourly momentum, still not bearish, I wouldn't say. I'd say it's still range bound, sort of forming support around 30, rallied back up towards 70. So it's interesting. We've still got these moves very slightly corrective on the MACD lines, but still I think you're still playing out a range play, and I think that for that reason you're still looking out for this 122.10 spike low to probably be part of a major low that's playing out in this chart. So it'll be very interesting to see if we close above obviously 122 figure and continue to close above that. I would say that that is still a fairly positive sign for dollar yen going forward. Resistance in place, as I said, at the Fibonacci levels of 123.20, and then subsequently this pivot level at 123.75 area, which had been resistance, became supportive, and then became resistance again, and was supportive to a certain extent on Friday before you had the sharp opening gap lower today. So lots going on dollar yen. Very interesting chart, I'd say, and I wish you good luck in your trading, and I'll speak to you later. Thank you.